Investing has grown beyond traditional assets. In today's market, while stocks, bonds, and mutual funds are still common portfolio additions, numerous additional options can pay off in the long run if you are ready to put in the effort. A good example is investing in real estate. If you want to become a real estate investor, you should begin by studying the concept of investing in real estate for beginners. Anyone can enter the real estate market, but only those with proper understanding can succeed. The real estate market is huge. You may be thinking, how am I ever going to be able to learn everything? Well, when you understand basic real estate concepts, then it will make it easier for anyone to invest in real estate. Hello everyone, and welcome back to Investor Info. In this video, we will break down 5 important aspects of real estate investment for beginners who want to start their career as real estate investors. So, without any more hesitation, let us get started. Number 5. House flipping. Flipping is a type of real estate investment strategy in which an investor purchases a property not to use, but with the intention of selling it for a profit. This is usually for wealthier investors with big capital to start with. Investors who flip properties concentrate on the purchase and subsequent resale of one property or a group of properties. Many investors attempt to generate a steady flow of income by engaging in frequent flips. So, how do you flip a building or house? In simple terms, you want to buy low and sell high, like most other investments. But rather than adopt a buy and hold strategy, you complete the transaction as quickly as possible to limit the amount of time your capital is at risk. In general, the focus should be on speed as opposed to maximum profit. That's because each day that passes costs you more money due to mortgage, utilities, property taxes, insurance, and other costs associated with home ownership. That's the general plan, though it comes with several pitfalls. That profit is typically derived from price appreciation resulting from a hot real estate market in which prices are rising rapidly, or from capital improvements made to the property, or both. For example, an investor might purchase a fixer-upper in a hot neighborhood, make substantial renovations, then offer it at a price that reflects its new appearance and amenities. If you are thinking about flipping a house, make sure to understand what it takes and the risks involved. Novice flippers can underestimate the time or money required and overestimate their skills and knowledge. Making a nice profit quickly by flipping a home is not as easy as it looks on TV. Number 4. Owning rental property. The very traditional method, buying a property and renting it out to tenants, you can buy anything from a single-family house to a multi-family dwelling to business property or a warehouse. Then you can rent it to tenants. If you'd like a hands-on experience, you can be the landlord yourself. Perhaps the biggest benefit to owning rental property is that it's a passive income source. This means that it's a recurring income that requires relatively little effort to maintain. It can be an attractive option for people looking to make some money on the side, or even as additional financial security during retirement. Of course, you'll want to work out all the cash flows before investing in rental property. In order to better ensure that being a landlord is more likely to be profitable for you, you'll need to factor in all your expenses. Once you have an idea of your cash flow, you'll want to assess whether the numbers suggest you're likely to be able to make a consistent income on the property before purchasing. Another important benefit of owning a retail property is that you always have the flexibility to sell at the right time. Say you're ready to move, but the market conditions aren't the best. Rather than selling your property for a loss, you can rent out your property until market conditions improve. Renting out your property gives you the flexibility of selling once you're in a better position to make a profit off your property. However, we've all heard of stories about tenants from hell, so there's always that to consider. Number 3. Real estate investment group. Real estate is a very risky market, especially if you are not trained in the business of real estate. Unless you want to spend some time taking training and investing in the real estate industry, then it may be a good idea to join, participate, learn, and invest with a real estate investment group that can help you when it comes to investing wisely, understanding the real estate business. Investors who are not ready to invest alone or take the first step without proper knowledge can benefit from a group of experienced real estate investors that can provide the right advice in terms of investment. The functions of a real estate investment group include buying several properties and then selling them to the individual investors in the group. For beginner investors, this may be the best choice, as a group can guide you on which properties to invest in and how to deal with real estate investments even without prior investing experience. An investment group may also be a good way to learn more about the real estate industry, get some investor friends, get an idea about how to invest and how to deal with bad investments, and get used to the terms and situations of real estate. The group can help you in choosing the type of investments perfect for your financial capacity and your current situation. Another benefit of a real estate investment group is that most of their investments are usually very thought out places with good locations. Thus, investing in these properties is most likely smart and less likely to be harmful to your money. However, since the group has already made the first step in investing, all you have to do is weigh your options and settle for an investment best suited for your needs. Most likely, groups will provide choices for their investor, give real estate training and experienced advice, and provide insight into winning ways within the real estate investment industry. By joining an investment group, you can hit two birds with one stone, as you learn more about investments and begin your venture into the real estate industry. Always be cautious, however, when it comes to choosing the investment group to join. Your success in investments may highly depend on their choices. Make sure to only invest in a group after enough research and assurance that the group is highly credible and reliable. Number 2, Real Estate Investment Trusts, or REITs. Real Estate Investment Trust is probably the best option for investors who want real estate exposure in their portfolios without going through a typical real estate transaction. A Real Estate Investment Trust, or REIT, is a corporation or trust that uses investors' money to buy and operate income properties. REITs are simply stocks or shares of companies that own or finance income-producing real estate across a range of property sectors. Basically, it allows you to invest in real estate without owning any. Investors who do not require or seek monthly income might have their profits automatically reinvested to increase the value of their investment. REITs can be purchased and traded on the major stock exchanges as with any other stock. So, is it a good idea to invest in real estate investment trusts? Here are 3 reasons why you might want to invest in real estate investment trusts. Affordability. The investor of REITs enjoys the benefit of being a part of a pool of capital, acquiring interests over much larger opportunities as compared to what he would achieve at his capital alone. For instance, it may not be available for an individual investor to afford a direct investment into a giant asset, such as shopping malls or plazas. However, he or she can get to invest in it via REITs in small chunks. Liquidity. Investment via real estate investment trust offers the added benefit of liquidity, the comfort of converting assets to cash. Unlike shares, it is easy to purchase and sell real estate investments. If the price of REITs you invested in goes up by the next day, you can log into your brokerage account and take care of your position in an instant. Transparency and flexibility. The whole process of purchasing and selling a REIT is clear and flexible. REIT investors can easily get access to information concerning REIT prices and get involved in trading throughout the day. To sum things up, investing in REITs is a good way to get exposure to the real estate market via the stock exchange. While you won't physically own the whole building, you get to see just how certain news here and there can affect the real estate market. Plus, most REITs offer good dividends. Number 1. Real estate crowdfunding. Crowdfunding makes use of social networks such as friends, families, and colleagues linked through social media websites like Facebook, Twitter, and LinkedIn to get the word out about a new business and to attract a wide array of individual investors. Basically, it's like joining a group of other investors to own a certain real estate and earning an annual percentage from that investment. Quite similar to REITs, but not quite. Real estate crowdfunding is a relatively new way to invest in commercial real estate. They give everyday investors access to assets traditionally reserved for only the wealthy. Crowdfunding sites pair developers and other real estate professionals with individual investors who want exposure to real estate without the hassles of owning, financing, and managing property. Crowdfunding has the potential to greatly expand the pool of potential investors, from whom funds can be raised beyond the traditional circle of insiders, owners, relatives, and venture capitalists. Recent modifications to laws around who can invest in real estate in this way and how have opened the door to more crowdfunding. While not perfect for everyone, real estate crowdfunding offers many attractive features. Here are several reasons why you should consider real estate crowdfunding. Low minimum investments. Historically, investing in real estate has been a practice only available to the wealthy elite. Buying an investment property usually required large sums of cash, often up to 6 figures. That's left a lot of people out in the cold. Real estate crowdfunding addresses this issue. Many platforms, including Peer Realty, allow investors to participate in deals for as little as $5,000. This lets investors enjoy the benefits of real estate investing while limiting downside risk. Geographic diversification. All real estate isn't the same, and the real estate markets aren't the same either. Real estate crowdfunding gives investors the opportunity to vary their risk profile by investing in more markets than they otherwise would be able to. Want to invest $100,000 in 10 different markets across the country? Real estate crowdfunding lets you do that. Alternatively, an investor who feels strongly about a particular market can focus on that market, even if they live halfway across the country. Real estate crowdfunding expands the horizons of real estate investors. No property management hassles. Let's face it, being a landlord isn't much fun. Landlords are responsible for selecting tenants, property up and repairs, and occasionally having to evict problem tenants. Unless you're a real estate professional, you probably don't want to spend your time doing all that. Real estate crowdfunding allows you to invest in real estate while leaving property management to the deal sponsors. Asset transparency. Real estate crowdfunding offerings are often compared to REITs, but there are several key distinctions between the two investments. Crowdfunding allows for a much greater transparency and control over asset selection and location. If you invest in a REIT, you may know the general types of assets that the REIT invests in, but you won't know anything about the specific properties. With real estate crowdfunding, you can select the markets and properties that you're comfortable investing in. You'll also receive periodic updates on the property, something you won't get with a REIT. Investing in your community. We'd be remiss if we didn't mention the last factor. Real estate crowdfunding has truly democratized investing. Investors can now help strengthen their own communities by investing in their own backyard. Crowdfunding can help connect local residents, community organizations, and other stakeholders by allowing them to directly invest in local real estate. This feature offers great potential in the years to come. Well, that's it for today. There are surely so many ways to invest in real estate. In the old days, only the wealthy could afford to buy a piece of real estate and make money from it. These days, even a beginner investor can dip into the real estate market with REITs and crowdfunding and make some money. How times have changed, right? Certainly makes you think of the future of real estate. Well, one thing's for sure, it definitely isn't getting cheaper. We sure hope you liked the video, and if you did, please like the video and subscribe to Investor Info. Do check out other videos as well. See you next time.